In this week's episode of the Stockscores Market Minutes, I'll answer the question, what has to happen for a summer rally to commence? We'll also take a look at the overall markets, figure out if this stock market crash is over. I'll be looking at the stock markets, the commodity markets, the crypto markets. And then, of course, at the end, we'll do our day trade of the week on LYT. All right, well, on screen right now, I've got a chart of the NASDAQ 100 ETF. The symbol is QQQ. And the first thing I want you to notice is in the last 3 years, we've had pretty good markets over the summer. And it's quite common that you get a summer rally. It tends to be on light volume, not a lot of individual stocks making big moves, but a few each day are doing so as perhaps investors are just optimistic and perhaps there's just an absence of sellers. So let's just take a look here. You can see back in 2019, we had a little rally in the summer. In 2020, a little summer rally. And then more recently, in 2021, we had a summer rally. Now, of course, we are in a very different trend right now. We are in a downward trend, whereas through that period, we were in an upward trend. So what has to happen for us to get a summer rally? Well, we've talked about this in the last few weeks of Market Minutes videos, but ultimately we need to start building some rising bottoms. We need to show that the buyers are in control. So let's jump to a 1-year daily chart and just take a look at how that chart is shaping up. So if I take a look here, click on daily, and let's draw some lines. All right, so you see how we've got falling tops. That's an indication that the sellers are in control. What's encouraging is this week, we've built a little rising bottom potentially. And if we can just break this downward cycle on the daily chart, it doesn't take a lot to do that. If we can break that downward trend line, we could get a little bit of strength in the next few weeks, even into August. Now, that does not mean that the long-term trend will have reversed because, of course, we have longer-term resistance there. But if you're a swing trader, a day trader, you can make money on these short little rallies that maybe only last a few weeks. The key thing is to wait for the downward trend line to be broken after the build of a rising bottom. We've got the rising bottom. Now we just need a little bit of strength to take us through that downward trend line. All right, let's take a look at the overall markets now, beginning with the S&P, and we'll take a little longer term view here to begin with, the 3-year chart on the S&P, and you can see that we have a downward trend line there, which I showed on the QQQ chart. We've also got a downward trend line there. What we need to do is break this on the weekly, preferably from a rising bottom. There is a lot of work to be done, and that's why the sentiment stock score is 37. And so I recommend, until we start breaking those resistance levels, to remain quite cautious in the longer term. Now the short term, let's take a look at the S&P in the 1-month time frame, 60-minute. You can see we are building this rising bottom. We had a little bit of strength into the close on Friday, and that may get us through the very short-term downward trend line next week. Oftentimes investors come back from long weekends full of some optimism. Perhaps the long weekend does them good. They come back happy. We see it quite often where the first couple of days after a long weekend, you get some strength. So that could materialize into a break of this pessimism that we've been in for some time. I don't want to overstate it, though. We still have work to be done in the longer term. Let's take a look at the Canadian market. T.XIU is the ETF that I like to look at, and you can see it's very steep to the downside. We started this weakness back there in April. That's when oil started to pull back. Oil, of course, has been propping up the Canadian market. Well, now it's all kind of fallen apart. We're going to look at oil in just a moment, but there's really no sign of optimism here. There's no rising bottoms. Unlike the S&P chart where you've got those, same thing with the NASDAQ chart, you don't have that on the Canadian market yet. So I want you to be quite cautious. The market is oversold. We're a long distance below the trend line, and so it is due for a bounce back, but there's no sign of one yet, and so therefore you should be relatively careful. Let's take a look at the microcap stocks in Canada. $JX is the symbol I like to use, and you can see the sellers are firmly in control here. There's no sign of buyer interest, and therefore be cautious with these stocks. Well, let's jump over to the commodity markets now. USO is the oil chart, and last week I talked about oil perhaps ready for a bounce back because it had come back to this trend line. And we did get that a little bit this week. We had some strength early in the week. It didn't really hold. Again, if we jump back to the daily chart, you can see that there was some strength at the start of the week and it gave it back into the end of the week here. And so we had this little bit of strength here. We started to pull back again, and this now sets up a falling top. And so I'm concerned because we could get a break of this upward trend line from a falling top, and that could lead to lower prices for oil. We could still hold it, but it doesn't look all that great right now, so I want you to be careful with oil. Gold also had some weakness this past week. You can see much worse looking chart here, falling tops on gold, and therefore I want you to generally be careful with it. We are at some support, and so I suppose if we break a downward trend line from a rising bottom, we could look better, but look at the scores. They're terrible, and that tells us that the sellers are firmly in control. Now I want to take a quick look at the Energy Sector ETF. We'll use the Canadian one because that's the trade I told you to watch for last week, and it worked for about 2 days. We had the bounce off of that long-term upward trend line. It fizzled out at the end of the week. That's not a great sign. It could still make another attempt, but if we start to move down through these lows, I think we're going to see more weakness ahead for the Canadian oil and gas stocks. All right, let's jump into the US dollar now, and you'll see one of the reasons why gold has been weak, and even perhaps why oil has had some weakness, because the US dollar is strong. It's in an upward trend. You've got rising bottoms. And think about it, if you're someone anywhere else in the world but the US and you want to buy gold in US dollars, well, it's getting more expensive because the US dollar is going up. And that's one of the reasons why these US dollar price commodities move down. All right, finally, let's jump into the interest rates. TBT is the inverse ETF for US Treasuries. And you can see that it's been going down the last 2 weeks. That means interest rates have gone down the last 2 weeks. We've had a cooling off of a very hot interest rate market, which is not a good thing because, of course, higher interest rates, bad for business, bad for the consumer who maybe wants to buy a home or a car. Well, we've seen those pull back a little bit. They still haven't broken this longer term upward trend, but perhaps we went a little parabolic, perhaps people got a little irrational. The bond market sold off a little too much, and now we're reconciling that. And so we could get a little bit of relief here, and that could be one of the things that motivates the market to break that short-term downward trend line that I talked about at the top of the video. And now my real final chart is GBTC. Let's take a look at that. This is, of course, representing Bitcoin, and you can see that it is continuing to be in a downward trend, continuing to show weakness. I really would stay clear of this. I think we're headed toward that $10 mark on GBTC before we find some support. We're almost there now, and I think that's a reason to be cautious with cryptocurrencies. All right, let's take a look at my ratings then. US stocks bearish long-term, neutral short-term. Canadian stocks bearish on both long and short-term. Gold neutral long-term, bearish short-term. Oil still bullish long-term because we are still holding that long-term weekly upward trend line, but we could break it, and so my short-term rating is neutral. US dollar bullish on both time frames. Bitcoin and the other cryptocurrencies bearish on both time frames. And on interest rates, neutral long-term and bearish short-term. What that means is, when I say bearish, that means I think interest rates have gone down in the short term. The long-term picture is still neutral. I think we are not yet done that rising rate environment. There's still lots of damage that could be done to the chart before we get a longer-term reversal in interest rates. All right, now let's take a look at my day trade of the week, and I always like to give you an example of some of the things that we do in the active live service on Stockscores. You can go to stockscores.com to learn about courses and this active live service that we offer. And this week I will show you one of the few stocks that was pretty hot on a very quiet Friday into the long weekend One of the things we always like to look for is abnormal volume. And you can see on this 1 day, 1 minute chart where each bar is a minute, there's much more volume today than on Thursday. And there was a number of trade setups. There was what we call a hit and run setup right here, a pullback play here, and a superhero strategy, which is one of the strategies I like to do right here. So our entry point was there, stop would be about here, and in this case the exit was just over here when the upward trend line was broken from this falling top. Now let's go through the economics of the superhero entry. We could do the others as well, but for simplicity, we'll stick with this one. So the entry price there was at about $5.52. Actually, sorry, the entry was right here on the break, not here. So $5.52. The support price, in other words, the place where you would put your stop, was at about $5.29. And that meant there was a risk of about 23 cents a share. So for every $100 of risk, you're going to take 430 share position. And that would give you a capital size of about $23.74. So $23.74. Now, if you margin that 3 to 1, which you can do on these stocks, you'd be at about $800 in your position size. Ultimately, at the exit here, it was up 5.4 RR, which means a $540 profit for every $100 of risk. That's a very nice percentage return, given that your position size was only about $800. So you're looking at 60-65% profit on that trade. No, even better, almost 75% percentage return on that trade. And that's pretty darn good for a slow summer Friday. Well, I hope that you enjoy the long weekend, and we'll look forward to being back with you next week. If you've enjoyed the content, please click on the like button, leave a comment about whether you think a summer rally is likely or not. And most importantly, trade well.